Today is the 13th of February 2023. My name is David Hickson, and in today's market update we're going to be taking a look at the way in which three different markets are moving down from peaks into their respective cycle troughs. Here is the chart for the SPX that we've been looking at for many weeks now. Of course, we have the important trough in the middle of October, which you can see in this analysis has been phased as a trough of 20-week magnitude. But I have hidden cycles longer than 20 weeks because you will know if you've watched previous market updates that there is some debate about the magnitude of that trough. It is either a 20-week cycle trough, which implies that the next 20-week cycle trough, expected towards the end of February, will be an 18-month cycle trough, or the trough in the middle of October is in fact the 18-month cycle trough, which would imply that the trough expected towards the end of February is of only 20-week magnitude. And so because we have that dilemma in terms of the magnitude of those troughs, what I find useful is to focus only on what I call my level of confidence, which in this case is certainly at the level of 20 weeks. In other words, I think the trough that occurred in the middle of October is certainly of 20-week magnitude. At least. As discussed in previous market update videos, the cycle action that has ensued since that October trough has been a bullish cycle action. And we determine bullishness, of course, by means of measuring how late in the cycle the peak occurs. And you can see that we have two peaks here, and both of them have occurred late. In other words, they've occurred after the midpoint of the cycle. That is the definition of a bullish cycle shape. The other part of the definition of a bullish cycle shape is, of course, the fact that the trough forms at a higher level than the level at which the cycle shape started. And that was certainly the case with the 80-day cycle that elapsed from the middle of October until the third week of December. We do not yet know whether that is going to be the case with the current 80-day cycle, which will of course be synchronous with the 20-week cycle trough that forms towards the end of February. But certainly, as discussed in previous videos, the fact that we have seen two bullish cycles elapse would seem to indicate that we are experiencing a bullish 20-week cycle, and that therefore the trough for the 20-week cycle will be higher than the level at which it started, first of all, and secondly, it would imply that the trough that occurred in the middle of October has greater magnitude. That is all information that we've discussed in previous market update videos. In today's video, I thought it would be useful to track the price movement as it moves down towards the 20-week cycle trough. But before we do that, there was an interesting comment on last week's video, I think it was, or it might have been the week before, mentioning the fact that at the important peak at the end of 2021, we also saw a bullish cycle shape elapse. And only in the final leg of that cycle shape did it actually turn bearish. It's a very interesting point, but there is an important difference between what happened at the end of 2021 and what is happening now. Let's take a look. The cycle shape in question is this move here from the 18-month cycle trough that occurred at the beginning of October into the 80-day cycle trough that occurred at the beginning of December 2021, and then the next 80-day cycle shape, which also experienced a late peak. So far in this cycle move, we had a similar situation to the cycle move that we have at the moment. In other words, we have two late peaks in consecutive 80-day cycles, indicating a bullish underlying trend. But what happened in the final move was a strong move down over here, as you can see, into this 20-week cycle trough that formed in January of 2022. And so we had a bullish M-shape that suddenly morphed into a bearish one. Here is the current M-shape that we are looking at with, again, a bullish 80-day cycle, and then so far another bullish 80-day cycle. What is the big difference between these two periods of time? The big difference is that the cycle shape that formed between October 2021 and January 2022 came at the end of a very long bullish run up. And so there was a tremendous amount of bullish pressure, which dissipated over the course of this 20-week cycle, and the bear finally took hold of the market in this fourth leg down of the M shape. That is something that you will sometimes see when a peak forms in the market. The big difference with what is happening now, of course, is that we have not had a big bullish run up to this cycle shape. What we are experiencing here is a change from a bearish cycle shape with an early peak and a lower trough into a bullish cycle shape. That is the big difference, and that is why what is happening at the moment might be the start of a bounce out of an 18-month cycle trough. But now let's zoom in again and take a look at this move down from this peak, which has formed in the first few days of February, and consider some targets for the 20-week cycle trough, at least, which we are expecting to form over here towards the end of February. So let's consider some FLDs. First of all, let's consider the 20-week FLD, because when we are considering the formation of a 20-week cycle trough, the 20-week FLD is certainly an important one. First of all, when is this trough expected? We can see a fairly neat alignment of the 20-day, 40-day and 20-week circles over here on the 20th of February. The 80-day cycle circle is all the way over here in the first week of March. And the 5-day and 10-day circles that are synchronous with that cycle trough are over here exactly in between the 20th of February and the first week of March. And so it is a slightly scattered nest of lows. But I would say that our expectation is for the trough to occur at this earlier date on the 20th of February. Now the 20-week cycle FLD does an interesting thing. It does a big spike up, as you can see over here, and then plunges down again to the actual time of the trough. There are some Hurst cycle analysts that work with smoothed FLDs, which is a very interesting idea, and it helps to eliminate these spikes. But I prefer to work with the raw or simple FLD, which is actually the median price displaced to the right, because on occasions where I see a strong move down in the FLD at a time like this, when we are expecting the trough, I find that the FLD doesn't provide very reliable information in terms of that FLD providing support. If price crosses down below the FLD, it might also provide a messy price and FLD interaction. And so I'm not going to focus too much on the 20-week cycle FLD. The next shorter cycle, the 80-day cycle, provides more interesting information in my opinion, because of the fact that the 80-day FLD is sloping upwards at this time, the time that we are expecting the 20-week cycle trough to form. And so that is going to be an FLD that I will be watching as price comes down into this 20-week cycle trough, because it could certainly provide support. Now, usually we would expect the 80-day cycle FLD to be crossed to the downside and to generate a target. If that does happen, then we might well have a target as low as about 38.50. But let's step through this price movement and watch how price has crossed down through the shorter cycle FLDs. This is where the fascinating concept of multiple FLD patterns comes into play. I'm not going to go into too much detail in this video. It'll be the subject of a geek video that I will be making soon. But let me explain how it works. Here is the 5-day cycle FLD. And as price dropped down from the peak that formed, I think it was on the 2nd of February, the first thing that it did was it of course crossed the 5-day cycle FLD. Interestingly, you will notice that it crossed below that FLD over a weekend, and that again highlights the importance of working with your Hurst cycles analysis on a chart that includes gaps over the weekend, or at any rate an FLD indicator that accommodates for those weekend gaps. Where did price actually cross below the FLD? Well, we judge that by monitoring the median price. There is the median price, and that is where it crossed below the 5-day cycle FLD. That generated a target down to about 40.69. So we switch back to a candlestick chart to see where that target was achieved. It wasn't quite achieved at the low of Tuesday last week, but on Thursday price did drop down and achieve that target. Now here is the interesting thing about monitoring multiple FLDs. If we display the next longer FLD, which in this case is the 10-day cycle FLD, we ask ourselves whether price crossing below the 5-day FLD would project a price target below the 10-day FLD, which in this case, of course, it did. There is the 10-day FLD, and you can see that the target from the 5-day FLD cross did indeed project price below the 10-day FLD, which means that we then have a price cross below the 10-day FLD. Again, we would switch to the median chart to see the exact price level at which that cross occurred, but we're not going to bother doing that over here. I can tell you that it was at that level over there. The 10-day cycle FLD also then projects a target, and the target generated by price crossing down below the 10-day FLD was at a level of 40.51. Interestingly, that target was pretty much exactly achieved on Friday. So now we move on to the next FLD, the 20-day cycle FLD, and we ask ourselves whether the price target generated by price crossing the 10-day FLD would take us below the 20-day cycle FLD. You can see on the chart that it already has taken price below the 20-day FLD. Again, we would look at median price to calculate the exact level at which price crossed that FLD, which was a level of 40.83, and that generates a target all the way down to 39.69. Now, interestingly, I showed you the 80-day cycle FLD earlier. A level of 39.69 is at about that level of the yellow line that I've just drawn on the chart. And as you can see, at the time that we are expecting the 20-week cycle trough to form, the 80-day cycle FLD is very close to that level. But again, we ask ourselves whether price achieving the target of the 20-day cycle FLD cross would take us below the next FLD, which is the FLD for the 40-day cycle. There is that FLD, and you can see that price achieving the target of the 20-day cycle FLD cross will indeed take us below the 40-day cycle FLD. What will the target be that is generated as a result of that? Well, we don't yet know, because it does depend, of course, on where price actually crosses below the 40-day cycle FLD. If we take a look at the analysis on the chart, you can see that a 20-day cycle trough is expected. It is actually overdue, but let me just hide the FLDs, which make the chart a little difficult to understand. If we measure the number of bars that have elapsed from the 40-day cycle trough that formed, in my opinion, on the 19th of January, we measure 17 days, which is the average length of a 20-day cycle. You can see that there were a few small troughs that formed at that point, and it is quite possible that the 20-day cycle trough formed on the 7th of February, but it is also possible that the 20-day cycle trough occurred late on the 10th of February, on Friday. And so because of that 20-day cycle trough, it is possible that we will experience a bounce here now before price drops down and achieves the 20-week cycle trough that lies ahead of us. If we display the 40-day cycle FLD, you can see that price might in fact cross that 40-day cycle FLD later rather than sooner because of this 20-day cycle trough. And so we don't yet know the level at which that FLD will be crossed. But if the median price of today's price action, and I'm recording this video before the markets open in the US, if today's median price crosses below that FLD, it will generate a target not in fact very much lower than this 39.69 target. It would be at a level of about 39.45. And so by tracking price action and watching how it crosses each one of these FLDs, we can develop an expectation for a target zone, which in this case is at about this level over here in this box, at about the level of the 80-day cycle FLD. Of course, when price reaches a cycle target, it doesn't necessarily mean that it's immediately going to turn around. The target is our minimum expectation. And it is possible that when price reaches the 80-day cycle FLD, that it keeps moving downwards and projects a target, as mentioned earlier, which will be much lower for the 20-week cycle trough. I thought it would be interesting to take a look at some other instruments, because we can compare the way in which price is crossing below the FLDs on those instruments. This is gold, and I'm not going to repeat the entire situation for the analysis, but as you can see, gold is also dropping out of a peak that formed over here in early February, and it has also been crossing below some FLDs. The 20-day cycle FLD projected a target down to 1889, which was this level over here, and of course did project price to move below the 40-day FLD. It crossed the 40-day FLD over here and projected a target down to 1859. That target of 1859 was achieved last week. Now here is the interesting thing. At this point, the Cascade pattern, which is what this pattern is called when FLD targets project below the level of the next FLD, the Cascade pattern comes to an end. Why? Because the target from price crossing below the 40-day FLD does not project price to fall below the 80-day FLD. So again, we have a situation where we have a rising 80-day FLD, which might well provide support because we do not have any targets from other FLDs projecting price to drop below that FLD. Of course, in normal circumstances, we would expect price to cross below the 80-day FLD on its way down to the 20-week cycle trough. You can see that in this trough analysis of gold, and I should remind you that a trough analysis of gold is probably not as accurate as the peak analysis, but in this trough analysis we have a little more time for the formation of the 20-week cycle trough, which is really centered more on the first week of March rather than the last week of February. And so it is quite possible that the 80-day cycle FLD will simply cause a pause in price action, and then we will generate a cross to the downside and eventually find support at the level of the 20-week FLD. Finally, if we have a look at Bitcoin, the important thing, of course, is this very important trough of 54-month magnitude, in my opinion, that formed towards the end of November. And here too, price is dropping out of a peak of probably 20-week magnitude that formed over here, again in early February. It crossed below the 20-day FLD, which projected a target down to 21,960, which was over here at almost exactly the level of the 40-day FLD. That target was achieved. It wasn't a target very much below the level of the 40-day FLD. However, the 40-day FLD was moving upwards very sharply at that time, and price did cross below the 40-day FLD a day or two later. Now, the price cross below the 40-day FLD projects price much further down to a level of about $19,400. But now here's the interesting thing. I mentioned that the 20-day cycle FLD didn't really project a target very much below the 40-day cycle FLD. And so we didn't get a strong, clean cross below the FLD. If I clear some of these pen marks, price hasn't so much crossed strongly below the 40-day FLD as simply stumbled through it by simply remaining at the same level while the 40-day cycle FLD soared upwards. That kind of price cross is a little suspicious in my opinion, and we must bear in mind the fact that the 80-day cycle trough is pretty much due now, with this nest of lows centered over last week. And so, although we would normally expect price to find support at the level of the 80-day cycle FLD, it is possible, because we are expecting the 80-day cycle trough to be occurring around about now, that in this case the trough will be found at the level of the 40-day cycle FLD. For the last few days, price has not really moved very much, and so we don't have very much indication of whether that trough is forming. If we experience a bounce now, then we will consider the 80-day cycle trough to have formed. If, however, price continues to drop lower, then we will be watching this level over here at about the level of the 80-day cycle FLD for the formation of that 80-day cycle trough. I do hope you found today's market update useful and interesting. If you have any questions, please join us on our Discord server or ask your questions in the comments below this video. I look forward to hearing from you.